Of course, it was a happy end of the year for the rand, but depending on your perspective, trading at R6.58 against the dollar last week. It's back around that R6.60 mark. What's been driving this currency so strongly over the Christmas period? I know that trading probably was quite thin.
No, the trading was quite thin, and that means that any movement in the rand was a bit over-exaggerated. But what we saw, you are right, we saw the rand strengthening towards the end of the year. And one of the main factors that was driving the rand was reports that South Africa has been invited to join the BRIC countries, which is really something that is positive for the rand and positive for South Africa from investment basis. And what we saw as well towards the end of the year is that on Friday we saw a trade balance also posting a huge and unexpected surplus of 8.4 billion rand from a deficit of around 3.2 billion rand in November. So you know that trade balance also is positive for the rand from the current account basis, because when you look at the year-to-date current account, especially in terms of the trade, we can expect that the current account to narrow a bit in 2010. So those two were the main factors, and of course from international we saw as well the dollar weakening a bit as well at the end of the year.
Of course, money supply and credit data out on Friday also accelerating to 5.2%. So it does show, although it's not very strong, it still does show the demand is starting to pick up in this economy, doesn't it?
No, it does definitely, Stephen. And yes, what we saw as well at the end of the year is that it looks like South Africa's recovery is well in place because manufacturing was also a bit, was starting to increase as well towards the end of the year. So with money supply and credit also starting to increase, I mean, for consumers, it's really good because it bodes well for consumer spending. So you are right in saying that, towards the end of the year, we did have some data indicating that South Africa's economy is coming out of recession, or it's actually starting to increase.
Well, you mentioned manufacturing, and we're getting PMI numbers out this morning, the Purchasing Managers Index. The last reading, that was for November, 52.9. Are we expecting that PMI to have sustained that movement above 50 for the December reading?
No, definitely. I think we are going to see PMI for the month of December also accelerating above the 50 level. And for that, it means that as a manufacturing sector can be expected to continue to expand. We know that in the month of October, we saw manufacturing sector increasing by about 2.5% year on year. So if PMI comes out much higher than the 52.9 level that we saw in November, we can still, expect a manufacturing sector to actually contribute positively to GDP growth in the fourth quarter.
Well, it's not just in South Africa where we're having PMI numbers out today. They're coming out across the globe. We already had the Chinese PMI reading coming out over the weekend. Disappointing slightly, falling to 53.9 from 55.2. And we also had that Chinese rate hike on Christmas Day. So really trying to put the brakes on growth in that economy to stop it from overheating and to curb that inflation.
No, you're right, Stephen. It does show that, the government's efforts of trying to slow the Chinese economy is actually working, because we know that they have been trying to slow the economy, given that they've been increasing the reserve requirement ratios in the Chinese banks. And with that, with manufacturing sector also slowing down, I think that, means that the measures, as I said, will have been working. But then with inflation also accelerating so much, I think we can expect that authorities will increase rates in the near future.
Tebogo, just going into this week, we have non-farm payrolls numbers coming out on Friday. We also have gold and forex and vehicle sales locally. But I should imagine those non-farm payroll numbers out of the United States are going to be key for the markets going forward. What are we expecting there?
Yes, when we look at the Bloomberg consensus, it looks like the consensus is expecting payrolls to rise with unemployment moderating to around 9.7% in December from 9.8 in November. And with the employment sector or the labor sector in the U.S. economy, it's really important given that the U.S. GDP is still slowing, and there are also some of the data out of the U.S. that are still showing that the U.S. economy is still struggling to actually increase. So when I believe that when we have the U.S. jobs data coming out much better than expected, that will actually bode well as well for the outlook of U.S. GDP.